Money is more than just numbers, and I want to talk about the different things that could go into financial decisions that aren't just math. We look at numbers all day, and so whenever we're looking at list of numbers or financial statements or transactions, we have to remember that there are human beings behind all of these numbers, that every transaction and every account on a financial statement come with it a set of emotions and events and life circumstances that guide those transactions and that those transactions have an effect on. This is top of mind for me specifically because I got an email from a client. I want to relay the story to you to show you why money is more than just numbers. And I'm going to anonymize this, anonymous, make it anonymous. I'm going to change the names and all that stuff, but I'm going to give enough context to where it's still actually what happened. So let's call this person Sally. And Sally has a day job and she earns a pretty high income. She has a 401k with her day job and she writes on the side. She has an author business that she's trying to build. But Sally is also taking care of her aging parents. And so Sally reaches out to me and says, Seth, I want to pull money from my 401k to pay off this debt that I have because I have a good bit of debt. I just want to be rid of it. Would that be a good idea? And what would that look like for tax purposes? So I start running the numbers and realize that while Sally was prepared to pay the 10% penalty for early withdrawal from a 401k, what she wasn't prepared for was the fact that pulling this money from the 401k would actually push her into a higher tax bracket and cause her to be subject to additional taxes because of the amount of income that she would be showing in that year. Now, a lot of times financial advisors or things might say, hey, no, this is not a good idea. You never want to pull money from a 401k. You're going to lose the earning potential. You're going to pay all these taxes. Just make a plan to get this debt paid off and just keep doing it and you'll be fine. But I've done this long enough to know that that's not the right way to answer this kind of question. And so we had a deeper conversation with Sally and found out that the reason that Sally was wanting to pay this debt off is because Sally's parents were getting older and they were dealing with surgeries, and the debt and the medical care and everything else was really just piling up on Sally and making it harder for her to actually move forward and think of anything other than all this debt that could be paid off. And so I wouldn't always recommend this to everyone, but I asked them to check to see, would it be possible to take a loan against her 401k? Some 401ks allow for that. And then it gets paid back through payroll withdrawals. Again, don't want to say that this is something that you should do just by default. I'm not saying that this is a right move for everyone, but in Sally's situation, because of the amount of debt that she had, because of the amount of monthly payments she was paying on the debt, because of the interest rates, because of the issue with her parents, this could be the right move for her. And so she checked into it. And sure enough, she was allowed to take a loan against a 401k that was enough to pay off almost all of the debt. The remaining debt is going to be really manageable. The payments are way lower. And she'll be able to get all her debt paid off and get that 401k loan paid back to herself, essentially, in a very short time. And the last line of the email that she sent really illustrates for me that this was the right move. She said, even with just what I paid off already, I feel so much lighter emotionally and mentally. It's been wonderful. So just imagine how much more she'll be able to write, how much more focused she'll be able to be at work, how much more present she'll be able to be with her parents, knowing that this was taken care of. And I think in the long run, financially, this is actually going to make more sense for her. But if we were doing things just on math, we'd be calculating the amount of gain that she lost by coming out of the market with those funds, because whenever you take a loan against your 401k, you're not invested anymore. Those loans, those proceeds that you took from your 401k are no longer in the market. So math would have said, oh no, the lost earnings are going to way exceed any interest that you're paying on this debt. And that's probably true. But the mental headspace and the peace that came from getting this debt paid off is going to allow this person, allow Sally, to be able to pay back that loan, pay off their remaining debt, and actually earn even more in the future. That's what I truly believe. So if you're making financial decisions and the math is telling you something different from what you're feeling emotionally, it could be that you need to separate your emotions from this decision. That's very, very possible. Sometimes the math is actually right, and it's important to recognize when we need to put our emotions aside and actually just trust the math. But sometimes we don't. Sometimes we need to trust our emotions and realize that maybe this decision is causing us more mental stress than it's costing us financially. Whenever most people talk about expenses and knowing whether or not you should take on an additional expense for your business, usually they focus on two things. Does the expense increase revenue, or does the expense decrease other expenses? And sometimes they'll focus on, does the expense save you enough time so that you can focus that time onto other things? But usually that's still the same as increasing revenue, because if it's increasing your time, you can invest that time into things that earn more revenue. So again, most people focus just on, does something increase revenue or decrease expenses? But I usually add a third category, and that is the energy or the emotion behind the expense. For example, social media. Maybe social media isn't directly going to increase your revenue, at least not at first. And it's usually not going to reduce any other expenses. But if you've decided that having a social media presence is important for your brand and important for your business, but the thought of doing your own social media just makes you want to vomit. And week after week, you put it off and you don't want to do it. And then you do it poorly and then you get aggravated with it. And then if you don't do it, you feel guilty. And when you do it, you're just aggravated and it makes you mad at everyone around you. Then maybe in that case, it actually makes sense to hire somebody to do your social media for you, even if that expense is not going to have necessarily a positive return on investment. It's still going to be a positive return on your, emotional capacity to deal with things. So I do think we need to look at these decisions that we're making logically, and we need to use facts, but those facts and that logic can be influenced by our emotions. And it's okay to sit down and say, how much emotional energy is this costing me compared to the actual money that it's costing you? It was really common before COVID and before all the interest rates dropped back in 2019 and 2020 that people would be sitting with a mortgage rate of like 5 or 6% while their investments are doing pretty good over here. And so I got a lot of questions over the time period about, should I pull money from my 401k or from my retirement to pay off my house? Now, mathematically, that almost never makes sense because think about it. Most of your investments you're hoping are getting about 8 to 10% return if it's something safe and long-term. And your interest rate on your house might be like 4, 5, 6%. And so if you're earning more in the market on this money than you're paying in interest on your house, it actually makes more sense to be invested and not pay off that debt. And some of the people that I have advised has been that exact advice. The mortgage payment really wasn't killing them. It was something that was manageable. They didn't have stress around it. They just thought, hey, maybe it'd be nice to have a paid off house, but it really wasn't bothering them that much. But I've also had the opposite happen where for some people, that house payment, that mortgage payment was enough to make it to where they couldn't afford childcare, or they couldn't afford the tuition to the school they wanted to send their kids to, or they were getting behind on other bills, and it actually made sense to get rid of the mortgage. They may have been in a position where they couldn't sell the house, or they couldn't, if they did sell the house, where they wouldn't have anywhere to live because maybe it wasn't a place that you could rent, or maybe it was a place they didn't have houses readily available to buy. And so in some of those situations, because of the specifics of their circumstances, I have advised, hey, actually, if you're okay and you totally understand what it's costing you to pull money out of this retirement, then I don't see an issue if you are okay with that cost of paying your mortgage off based on what is going to gain you emotionally. What is one financial decision that you have had to make in the past that maybe the math and your emotions were at odds? How did it work out for you? How did you make that decision? And if you're currently trying to make a financial decision, again, just remember, it's not just math. We all have to realize that there are people and emotions and life events behind all the numbers that we deal with on a regular basis. Hopefully this was helpful for you if you are making any of those decisions right now. Let me know in the comments if it was, and I will see you next time.